Oh, okay, everybody. Good evening, and thanks for coming back with us here on the Staple Crew. Tonight, we have a special guest with us who's been around everything that you and I want to know about IBC, and he's actually, I believe, if I'm not mistaken, has actually met Mr. Nelson Nash. If not, I would certainly like to hear his story, his affiliation with the great man that he was. As always, we have Mr. Simon here with us, but all right, we'll let you chime in here in a minute, Simon. This evening, we are again blessed and thankful and honored that we have Mr. Scott Chapman here. Scott, how are you, sir? And how are you doing this evening? And could you tell us maybe just a little bit about how you got into this and how you ended up knowing maybe Simon and I?
Yeah, absolutely. Well, thank you, first off, to Allan, to you, and to Simon for allowing me to join in here tonight. I have been in attendance of a few of your shows before, so and Simon and I started talking on a side conversation about IBC and communicating about it, and we had a connection there, as I know you guys often talk about, Jarrett, and so that was kind of our common connection. And so, yeah, I'm honored to be here and looking forward to digging in. And just, to me in my life, it's all about helping people, and whatever that looks like. It looks different in everybody's life. And but I want to help people because, to me, that's why God put us on this earth, and is to bond together, to help one another, to collaborate in any way we can, to help each other succeed, be better at what we do, and also to learn from one another. Because one thing Nelson Nash taught me is never stop learning. Nelson was big on the arrival syndrome, and boy howdy, that hit me between the eyes when I read that and talked to Nelson about the arrival syndrome. He said, never ever arrive, always keep learning. And he showed me a picture one day of a little, and Allan, I know you're boats and sailboats and so forth. He showed me a picture one day of a sailboat on the ocean, and this was like an aerial view, and that little bitty sailboat on that vast ocean. And he said, Scott, you know what that sailboat represents on this big ocean? And I said, what? He said, that represents what you and I know, and that ocean represents what we don't know. So I am I'm in Sandersville, Georgia. Just a little bit, not to bore you with too many details, but Sandersville, Georgia is a small rural community. We call it God's country. Been here all 56 years. Well, next month will be 56 years of my life, and raised my family here. Been married for this December, be 30 years, and got two sons. One's 27. Thank you. One's 27. One's 22. My oldest son, Zeke, owns a apparel company where I help him in that through infinite banking is actually what made his business possible. I had some clients that invested money. I invested money, and without infinite banking, his business wouldn't be there.
Love that.
We
love it.
We buy cotton from Georgia cotton farmers, and we turn it into garments. And we take it through the whole process, from raw cotton to the spinning, the knitting, the finishing of fabric, the cutting and sewing, the whole process. And we never mix one farmer's cotton with another farmer's cotton, so that if the two of you were cotton growers and we were buying cotton from you guys, then Simon, if we were making 10,000 shirts or sweatshirts, right, from your cotton, your name would be this cotton in this shirt was grown by Simon in such and such a county in Washington State.
Right on.
Same thing. Yeah. And so it's really cool. So my son Zeke does that. And then my son Zeb, who is my youngest, he's in the business with me. I've been in this business for 14 years. I was in the contracting business, and we'll talk a little bit more about that when you guys want me to. But up until 2008, and most people remember what happened in 2008 in the housing bubble. And my family lived that. We were in the contracting business. We were developing land, subdivision, spec building, custom building on your lot, building on lots that we own for people, whatever it was. We were rocking and rolling. And here in rural middle Georgia, we are located about halfway between Macon, Georgia, and Augusta, Georgia. So everybody's pretty familiar with Augusta, Georgia, with the Masters.
Oh, yeah.
And if you went straight across the state from Augusta, if you went due west 2 hours, you would be in Macon, Georgia. And we're halfway of that line. And so we're very rural, 2 hours from Atlanta, 2 hours from Savannah. So I tell people I can be anywhere and back in a day, and I can be away from it all at night when I lay down, to go to sleep. So
That's great. Yeah.
But we were sitting right here, and we were doing in the early 2000s, and the prices that were going on at that time, we were doing 5, 6, 7 million a year in construction. So fast forward to today, that'd be 10, 12 million a year.
Sure.
So we were rocking and rolling, and thought we were. And I was like most everybody else. I was 40 years old when 08 happened, and it started breaking loose and coming untied. And I was like, boy, what is happening here? And as Nelson Nash says, as he said so wisely, reality set in. And boy, when it set in hard. But God's been good to my family. And, we moved forward from there and found the infinite banking concept. And here we are today. So, I love what I do. I love living right here. And one thing, my furthest client from right here is actually in Gold Beach, Oregon. So I've been able to work with people all over the United States.
Oh yeah. Okay.
Yeah. And
Yep.
So it's cool, So
I know where Gold Beach is.
West Coast, you got some West Coast roots, huh?
yeah, that's where my furthest client is. So
Now you have me curious. What sort of garments do you make?
So my son Zeke, they make T-shirts, they make sweatshirts, they make hoodies. All this is cotton. They're going to be making polos, and then they have a line where it's also polyester and blended materials that they make a lot of different stuff in. But his company, Magnolia Loom, is the name of the company that does the Georgia cotton. So it's a pretty cool story. You can look it up online, magnolialoom.com. And see his story and what he does.
Yeah, that sounds great. I'm going to look that up. I just marked that down. I got to check that out.
Yeah,
so
There it is.
there you go.
Here.
Let me click on that.
Yeah, click on that and there it is right there.
There you go.
Yeah,
See
cool thing.
shirt. Look at that.
See the shirt, yeah, not bad. I'm actually
That's a cool concept, actually. I like it.
I'm going to be reaching. I've talked to Scott about this, Allan, but I'm going to be reaching out for some a special construction hoodie with a few different logos on them for the crypto space.
I've got some ideas as well. Well, on my website, on my show, on my website, I've designed a few shirts with Joanna's help, with Brent's help, and we've created some really kind of cool shirts. But man, if I could get a local or a homegrown shirt made out of true cotton, that sounds pretty cool. I like it a lot.
Yeah.
What people don't realize is the true cost of what shipping our, and I don't want to chase a rabbit. I know we got other things to talk about, but the true cost of shipping our manufacturing overseas is cost us far, far, far more than the numbers show. It is devastated. It has devastated this country in rural areas, in the job markets. I mean, it has changed. The last 30 years has changed the landscape of this country. And there's even a quote that my son Zeke found where Thomas Jefferson back then, talked about the importance of home manufacturing, of domestic manufacturing, and how the stability of our country would depend on it and the financial well-being. And here we are, and we've shipped everything overseas. So what Zeke is doing is actually, most people from a business perspective would tell you he's crazy, because it's so much easier just to go with the flow and ship it all overseas. It's cheaper to do. It's easier to do. So here he is going to literally, it's like a river, it's like the Mississippi River going south, and Zeke's trying to swim north. And what he's doing, going against the current, because he's had to create a whole supply chain. And it all happens here in the Southeast. It happens between Georgia, North Carolina, and South Carolina, and got it going and got it happening. And it's not easy. And there's and it's more expensive, but hey, it's really not more expensive when you look at the true cost of what, like I said, shipping our jobs overseas is.
Sure.
Yeah. I love it. I'm telling you, I'm very interested. We do have other business tonight. Unfortunately, I'd love to talk to you about that, maybe off camera.
Yeah.
Okay. Hey, Evan Burke is in the house. Love you, brother. It's good to see him in the house. I've got a bunch of darn questions here tonight, but let's. I'm such an entrepreneur. I love starting business or the concept of beginning a business. Maybe not pointing out exactly your son's business, but let's just say what has really helped him. How did you use, in a basic simple way, how did you use IBC to help him compete against a very, like you're saying, very competitive Chinese market and the rest of it? But probably because of IBC, he was able to compete, and banking wise. How did he do that exactly? You were very proud to say that Infinite Banking really got it rolling. Exactly,
Right.
how was he able to use that?
Yeah. So great question. So Zeke had a policy that he had started when he was 15. Of course, I have multiple policies, and then I have clients that were involved in this
I love
picture.
that. 15 started a
Yeah.
policy.
15, yeah. Forget the
best.
paper out, dude. You're doing this.
So there were several clients of mine that had been clients for a while that really liked, Infinite Banking, and Zeke, prior to starting his garment company, was in the produce. He sold produce and bought and raised cows and stuff. So he's always been a little entrepreneur and doing things to make money. And so when the opportunity for Magnolia Loom came along, he needed funding. And there again, as kind of going against the flow, going against, how things are done modern day, most banks were not interested in that conversation, to do that, to help him. So as Nelson Nash used to always say, one of the things that, Nelson died 5 years ago, and one of the things I remember so vividly about him saying is that if opportunity will seek you out if you have cash available. So what he meant by that was that, if we have all of our money tied up in government created plans like 401ks, IRAs, et cetera, that are not liquid, then all the opportunities in the world can come along and you can't do anything about it. But if you've got liquid money sitting in a place that's readily available to you, those opportunities will seek you out. And that's exactly what happened here. When Zeke came up with this idea, he had just a normal everyday screen printing operation going on. And he came up with this idea of creating garments out of Georgia grown cotton. And we got to talking about it. He had some money. I had some money in policies. I had a lot of my money out doing other things. But I also had clients that I went to, and I talked to them about it, and they really knew Zeke. They watched him. They used to buy produce from him. They knew his entrepreneurial spirit. They knew our family, and they said, "Sure, I'd love to put some money into this endeavor." So there again, they had liquid money, and in their policies. So they were able to.
They were IBC clients already.
That's right, and they were already IBC clients. Been clients for a number of years.
This is really what I'm beginning to understand. Well, I guess I've been putting this together for a while now, but I'm really starting to get the picture of, we start basically a community because of honesty and belief in each other, and we appreciate each other, and we want to help each other understand how to become their own bank. Well, then you become a community of bankers, and then you have different opportunities. Some of us are just trying to pay our debt off with this. But then once you've reached that point of I'm debt free, and then now I'm still putting 25 grand maybe, or 20, 30, 50 grand a year into this thing, and I'd like to do something with it. Then they become entrepreneurs. And it's not just about simply buying crypto with it. It's really about, well, what's the best opportunity for my money? And then you have all these other bankers in which you've created a community with. And then you have the opportunity, like you've said, which so rings true with everything I know about money, that when you have a pile of cash, opportunity will find it. And it's such a great comment. And it's so true in my life. But I worked for a fantastic gentleman for many, many years. And he told me the only difference between a wealthy man, no, he used to say it like I'm a yacht captain. So he'd sit on his yacht and average middle-aged, whatever, middle income people would walk by. And he'd say, Allan, the only difference between where I'm sitting and those people right there is $10,000. And I'd be like, well, in the beginning, I didn't understand it, and I'd say, well, okay, Mr. Hogan, well, what do you mean by that? He said, well, those people can't put $10,000 all in one spot. Because the kids need shoes and the washer just broke and they're going to need a new car because they got to commute to work and the old one broke down and now they're into these new payments and they don't know what they're going to do and they don't understand how to budget their money. So they're never going to have $10,000 all in one sock under the bed to where they can, in that $10,000, the first time they invest, it might just fail. But the second time and the third time might just fail. But that fourth time is how I got here. This is how I sat on this yacht today. And generations of my children are going to be fine because that fourth opportunity that I had. And IBC just reminds me of exactly what Dan Hogan always taught me. Mr. Hogan, I love the man. And he said exactly that, but he put it in a way that's what IBC is. You can find that $10,000 somehow, and now you can use it over and over and over. So if you need to reload 3 or 4 times, you can do that. You can keep doing it. And that's just such a great, great thing that we've all stumbled across.
It's what Nelson Nash referred to as Parkinson's law. Being able to beat Parkinson's law and overcome, and being able to to do that. I mean, so Nelson was a character, and I know y'all asked me early on, and I guess I kind of didn't answer all of your question. And if you want me to go back now and do it, I will. But you asked me about how did I know Nelson personally? And boy, did I know Nelson personally. I've been doing this now for 14 years, so since 2010. Nelson died a little over 5 years ago, and so I knew Nelson for 9 years. And
cool.
Nelson was one of the most genuine, one of the most humble, one of the most honest, and most knowledgeable people that I've ever known in my life. And he was very matter of fact, but he wanted to share with people. He wanted people to learn from him and to know. And Nelson was very well studied in history and economics. And he would often say, you can't know economics without knowing history, and you can't know history without knowing economics. And Nelson had an extensive reading list on his on what he had read and recommended during his lifetime. And he said, if you'll read every book I have, you'll have the equivalent of a PhD in history and a PhD in economics. And he was right. But I came up under Nelson's leadership and guidance in this, and I'm not bragging at all to say that. I feel very humble and honored to have been able to know the man personally and to sit with him individually, one-on-one, and to learn from him. And I consider myself and Zeb, my son, as well. We are Nelson Nash purists. We do it the way Nelson taught it. We do it the way Nelson did it. And fortunately, our office, I'm in Georgia, but the agency I work for is out of Birmingham, Alabama. And we'll gather there soon. So Nelson lived 5 miles down the road from our office in Birmingham, and he would often come in and sit in training and so forth once he met Justin and those guys. Funny story there. Nelson was there teaching the infinite banking concept, lived 5 miles from our office. And Justin had never met him and never heard of him until they were at an event in Orlando, Florida in 2008, where Nelson was one of the keynote speakers. And when they introduced him as being from Birmingham, Alabama, Justin said, "What's this all about?" So they connected there and got to be friends very quickly. And on literally from that point forward, on a weekly basis, Nelson was in our office teaching, training, and helping us learn and do things. And so I would every year in December, we have a company Christmas dinner. And since my wife and I live in the country, we look forward to going to Birmingham. It's a bigger city, and it's always right at our wedding anniversary in December, and we do a little Christmas shopping and stuff.
Yep.
So she said, I want to go over there a few days early. And I said, I want to go a day earlier than a few days. She said, why? I said, and this was probably my 4th year in the business. And I said, I'm going to call Nelson and I'm going to ask him to do something. And she said, what? I said, I want 4 hours of his time one-on-one, me and him. And I want to be able to pick his brain and ask him anything about anything he's written, anything he's done. I want to be able to ask him questions. And I said, so I'm going to call him and see if I can do that. So I did. I called Nelson up and I said, Nelson, we're coming into town December so-and-so. I said, I want to come a day early. I said, and I want to be able to sit with you one morning for 4 hours. I said, I know you're busy. I know your time's valuable. I will pay you whatever you say I need to pay. I want to pay you for your time. And I said, but I want to sit with you for 4 hours and pick your brain and be able to ask you anything I want to about how you discovered this concept, how you use it, and so forth. And he got quiet for a minute. And then he said, absolutely not. And I was like, okay, that didn't go so well. And and he said, there is absolutely no way I will let you pay me one single dime for my time, but you can sit with me and ask questions as long as you want to. And I was like, wow. So we did. We went over and had coffee, and he said the only way you can do it is if your lovely bride comes and sits with Miss Mary while you and I are in the office.
Right. Yeah.
So we ended up spending a whole day with him, and it was just fabulous to do that. But I'm not saying any of that to brag, but just having that relationship with him, being able to pick up the phone. Of course, he was born in Georgia. He was a Georgia Bulldog at heart. So, being able to learn from him and being able to now, if you look at my bio on infinitebanking.org, I talk about carrying on the message and mission that Nelson started. And I take that very seriously in doing it the right way and doing it the way that Nelson taught us to do it.
Yeah. Yeah. That's there's a great question in here by Atlantic.
I see that.
We should get to that, but I'm going to answer it right quick. When you meet or just when you just listen to Nelson Nash's interviews, like, why would you go to a different company? There's people on this planet that come to in your lives and touch your lives and touch millions of people's lives, and that's meant to be. And when you feel it, you see it. When you see somebody like that gentleman, that I've met many people like him, I've been so blessed. But when you meet those kind of people, and then they turn something into that has helped so many people's financial well-being and got them out of the hole they were in, that it's like, why would you go to a company that has a board and a corporate, and there's 12 board members that don't give a damn about who buys what policy or what they do with it? Why would you do that? Why wouldn't you support a founder that gave his whole life to this? Because
absolutely. Go ahead.
No, that's right. Go ahead.
Oh,
Simon, I've been doing all the talking. You're not even
I'm soaking up the wisdom, man. I'm getting ready to throw curveballs here, but Atlantic threw a curveball in the whole thing, and my whole thought process.
I was kind of answering.
Would you mind actually, Al? Because I'd like to actually jump into this real quick here, because I think Atlantic actually is in Canada for starters. Okay, but I'm just going to read the question. Here we go, guys. I have people asking me to join Pramika. Is IBC a part of their program? Also, guys, why is it important to do IBC with you guys as opposed to another organization? What are the advantages? So let's start with. I'm going to go answer the second part first. In my opinion, I'm sure Scott would love to chew that part up as well. And when you're wanting to do the infinite banking concept, in my opinion, it is imperative to use an authorized IBC practitioner. Why? Well, if you go into the hospital someday in your future, and I hope this doesn't happen to you, but if you need a quadral bypass, do you want a non-authorized certified heart surgeon open you up and do the thing? No. You're going to want the best of the best to get the result that you're looking for. So when you read this book, when you come on to the show, Atlantic, and you got great questions. You really, really do. Love your questions. Yeah. It's like it's finding those in your area that can. Now I know you could go to theinfinitebanking.org and you can actually click on resources and then scroll down and you'll see two maps, one of the continental US and one of Canada. You can click on your province and you're going to find a list of authorized IBC practitioners in your province. And I would talk to them first, because the second part of this thing is we're trying to get a specific type of contract that is more beneficial to us, the policy holder, than it actually is to the insurance company. Beneficial meaning we're able to less limitations on what we can and cannot do. And there is a good understanding with those specific mutual insurance companies, mutual participating, dividend paying whole life insurance companies. And yes, there really is kind of a handful. And there's reasons to that. And I'm going to jump into that later with another question that I actually have for Mr. Scott here.
I like my answer better.
Well, that's okay.
When you understand who Nelson Nash was and what his, I'm going to use this term very, very loosely, the disciples of his belief in his work.
Sure, absolutely.
It's more about what you do for the people instead of the bottom line profit.
Right.
And look, of course, everybody's going to make an income or whatever it may be, but would you want to be with a team of people that care about people? And that's really what started this channel. That's why my son and I started this channel, was we saw so many people in crypto and so many that they just wanted to get rich and where's my Lamborghini? And I don't understand. And it's like, well, people have a lot of basic, simple questions about their life and their economics, and they want to know what to do with it. Well, that's what we do here, is we suss out good, honest ideas that we use, that we've actually participated in. And then we say, don't do this one, do that one, because we like this one. So we're beating the question up, but I have a resonance. I have a feeling. I have an emotion about what Mr. Nash did. And why would you not go with that?
That's not, yeah.
Yeah. It's more than math. It's if that makes sense. Yeah.
Hey, Simon, to Allan's point, today when we were on the meeting with Kelly Halverson, he talked about people. What does, and yes, there are other mutual companies out there, but what did Kelly come across as saying? What does Emeritus care about? Do they care about the bottom line for the stockholders, or do they care about the people who do business with them?
They actually care about the people, and he really reiterated that at the end of the meeting when he said, for him personally, it was very exciting and fulfilling to see the results of the work that they do, in the office every day, and they get to see the people that they're helping and how it's benefiting their lives and how they're using it to benefit their lives. Like that was great. that was very, very great. And I was just trying to highlight, the mutual part, the specificities or the specifics. Yeah. Not all of them, but to some of them of like, hey, we want this specific type of contract. you know, with specific type of companies. One of them that you deal with primarily, Emeritus. I know Atlantic Living's up in Canada though. So I know there's some different things going on there, but nonetheless, to the point that you're both bringing, why would you go anywhere else except for the originating source of this plan and process and that? Go ahead.
Yeah.
And one thing too that you know, when Nelson wrote this book, you know, and he was writing about a concept that he discovered. He didn't create. This book's not about a product. This book's about a concept that utilizes a product.
It's a tool.
This book's about a process, not a product. And so infinite banking is a process, and you can actually do it different ways with different things. But what Nelson discovered was the most effective and efficient way to do it. And so that's the thing is, okay, what tool can I use? And I bet you there are people watching this or will be watching this that may be in a business that they could think of a tool that they bought for an intended purpose that actually works better for a completely different purpose that the tool really wasn't even made for, but somebody discovered how to use it for that purpose. You know? And that's what
kind of like a vice grip turns hammer.
Yeah,
that's right.
Yep, and that's what Nelson did with a properly structured, properly funded, properly implemented and designed whole life insurance policy. It's got to be done the right way to be what Nelson teaches us in this book, to use it the way he teaches us.
I got to say hello to Janet here. She's a good friend of mine, a very dear friend. So, hey girl, how you doing? I hope everything's good tonight. Let's did you want to hit a couple of these other ones, or did you have something?
Simon, go ahead. No, let's hit these questions. Let's hit these questions, because I'm pretty sure most of these questions in here will touch on some of my questions that I was going to lay up, real easy ones. All right. Thoughts on the financial institutions copying IBC concept and offering it as a service as more people are aware of it? Thank you. Scott, take that one away. That's all you right there, brother.
So what is it they say, you know, is the best form of flattery when somebody imitates you or whatever? That's the best form of flattery there is. You know, there again, guys, Nelson Nash didn't invent anything. He discovered it. He discovered this concept, and he would be quick to tell you. And if you read this book, you'll pick up very quickly that Nelson Nash was a believer. He was a Christian man, and he meant it, and he lived his life that way. And he will tell you he discovered the ability to build this concept on his knees in the middle of the night, praying to God to get him out of a financial mess that he had gotten himself into with real estate investing. And that led to him. He was also very big on thinking differently. If someone's so caught up in the modern day way of thinking, they'll never get this. You can only get this concept if you're willing to think differently than the masses, to really go against the tide and the herd. And so Nelson, through the years, when he early on, you know, in the 90s, before the internet was a big thing, you know, before you were emailing, before cell phones were everywhere, Nelson was going around this country doing seminars on the infinite banking concept, and he was literally calling people, inviting them, sending invitations in the mail. He would have a venue set up, and he would literally, he told us this numerous times, he would have 30 people saying they were going to be at a seminar tomorrow evening. Tomorrow, he would call all 30 of them and remind them about it, and he would get there, and 2 of them would show up. 2 out of 30. Yeah. But guess what he did? He still did his seminar for those 2 people that showed up, the full-on deal, just like if all 30 of them had been there, because those 2 people showed up. So as time went on, and here comes the internet, here comes PowerPoints, and here comes different things, you know, it made that easier for him, but it also made it easier for people to copy what he was doing and to put their own twist and spin on what he was doing as it got online and stuff. So, so there are people out there, like there's a lady named Pamela Yelling that does Bank on Yourself, I think it is. And she was a student of Nelson's, and they parted ways. She wanted to do some things that Nelson wasn't in favor of and fond of, and they parted ways. and went their own way. And there are people that are taking it and turning it and churning it and twisting it and using different products. We have to, to be on that website, to be an authorized practitioner, I actually have to sign an agreement that says if I'm going to use Nelson Nash's information, his products, his books, his videos and stuff, and I'm going to call it the infinite banking concept, I can only use a whole life insurance policy with a mutual company, structured, funded, and designed a certain way. I can't use other products. And if I do that, I'll lose my certification if I do anything differently. So they're very serious about that. And the reason that came along was to this question, thoughts on financial institutions copying IBC concept and offering it as a service. It's great that more people are finding out about this. It makes my life so much easier, man. We get calls, people have seen something on TikTok, YouTube, or whatever. And a lot of it, we have to spend a lot of time helping them unlearn some of the mistruths and untruths, misinformation that think they've learned about IBC. And we spend the time unraveling and unwinding that for them to get the truth to them. But Nelson, what was happening is he went around doing these seminars. It'd be like me calling Nelson to come to my town. Let's say I've been an insurance agent and I find out about this and I learn a little bit about it. And I call Nelson, hey, I want you to come to my town, do a seminar. And he says, yeah, let's set up a date. I get a room full of people and he shows up and he does his seminar. And I buy a bunch of books, people there buy a bunch of books, and everybody's fired up. And Nelson leaves town, and then I go selling them IUL policies and doing something completely different.
Yeah.
And calling it infinite banking. Well, what that just did was when those policies start breaking up and not doing well and not doing what Nelson teaches because of the guarantees and provisions in a whole life contract that's not in those other products, then Nelson gets a bad rap. The insurance companies start getting a bad rap, lawsuits start happening, and bad things are not going good. So right. When that started happening, that's when the Infinite Banking Institute was put in place. I had been in the business for 3 years, really 2 years. 2010, I came in. 2012, 2013 was when they put the practitioner program in place and made it to where we have to go through that program where we study the inner workings of life insurance policies, life insurance companies, Austrian economics, and how all that ties together and works together to be the infinite banking concept. So there are companies out there, most insurance companies don't necessarily promote it from the top down, but they're the ones that are in the space, the few that are in the space are very friendly to it, and want to see it succeed. So,
yeah, that was a well put answer.
Thank you, Scott. Thank you.
So exactly what we were looking for. Luke, we just kind of answered that one, which we just did. Let's hit Pete. Pete's got one here.
Can you tell me the difference between Index Universal Life and the program that Nelson Nash is doing? Are they similar, or is one better than the other for what we're doing?
So for what we're doing, that's a great question. When we get off, and for what we're doing, they are very different. IUL, as we'll refer to it, Index Universal Life. There's VUL, Variable Universal Life. There's EUL. There's all kind of UL animals. All right, and then there's whole life, and there are different ways to structure whole life products and policies. The IUL world is not suitable for infinite banking. Nelson Nash, there again, I just said we have to listen. Nelson Nash and the Infinite Banking Institute don't make one dime off of anything that I do. Okay,
that's right.
They're not, the Nelson Nash Institute's not making money off of me and my clients. Okay. So why does it matter to them what we're doing out here? It matters because this is what the whole life, properly structured whole life product is what makes this work because of the contractual guarantees that it has. IUL, VUL, EUL, they all have their places in the insurance space. But the only truly permanent life insurance product there is whole life. The very word whole means for your whole life. If you do your part, the insurance company is going to do their part. It's a mutual contract. And the difference in that is in a whole life product, you're actually partnering with the insurance company. In a universal life product, you're actually betting against the insurance company. And I'm going to share a real life story here. So in a universal life
indexed. They're all indexed too, correct?
Right. They have no guarantees on their mortality fees and expenses and those kind of things. From this right here, I can show you from day one what the guaranteed numbers are going to be 50 years down the road. I can show you what the projected non-guaranteed dividends are. And the cool thing is once those dividends are paid, they move to the guaranteed column. They become guaranteed money. But your cost of insurance in a whole life policy never goes up. It's you're never going to get a letter in the mail saying, hey, we need more money because your policy's blowing up. So I'm going to give you a real life story. So I have a client that's been a client for about 10 years. I went to college with him. He and his family, his mom and dad owned a business in Macon, Georgia, very successful business. And his dad decided to sell the company. They started doing infinite banking with me. I started doing some other retirement income planning stuff with them as well. And the father, Mr. Sam, he had 3 IUL policies that he had bought. So this would have been, he passed away 3 years ago. He bought those policies around the late 90s, early 2000s. He had them about 20 years or maybe a little more. So those policies are built on some assumptions that that reality is never going to set in. And Nelson Nash would be quick to tell you reality always sets in. So when interest rates and stock markets are going great and all, they're selling these policies, and he had about, I think it was about $2.5 to $3 million in death benefit between 3 policies. All right. And he was sold on the assumption that he could pay premiums into these policies for about 10 years and never have to pay again because interest rates would be going up, the market would be going up, and those indexes would drive that money to go, and there'd be more money than needed to carry those policies into his death. Well, guess what? When Mr. Sam died 3 years ago, there was 0 death benefit that went to his family from any of those 3 policies. All 3 of them lapsed. Ouch. They lapsed. I sat with him in his home, and we called those insurance companies, and we asked them what he would need to do. He was getting these letters in the mail. We said, what does he need to do to keep these policies going? And it was something like on one policy, he needed to send them $10,000 this year. On another policy, he needed to send them $16,000. And he would have to do that every year going forward. And he refused to do it. He said, no, because I was told back by somebody that sold them to him, I'd never have to pay any more money in it. But it didn't matter. It wasn't a contract. It was not a contract. He was betting against the company. The company was betting against him, where what Nelson teaches us in this book to use in the form of a properly designed, structured, and funded whole life policy, we're working with the insurance company for the mutual benefit of one another under contract law. And that makes a huge difference over time in the way. Yeah, absolutely. It's all the difference in the world.
Do you want to be a partner with big companies that are actually paying dividends, or
absolutely
against them?
Absolutely.
That's how I feel about term too. It's like right about the time that you're going to need it or want it, the thing expires on you. You're like, oh, great. Well, that was fun.
Well, term life insurance is a life insurance company's favorite product.
I know.
They love it. They love it. It's a cash cow for them because they never, less than 2% of term life insurance contracts ever pay a death benefit. So it's a cash cow for them.
They've crunched all the numbers and who you are and what slot you fit in. They're like, well, we're betting against you dying before this period of time. It's like,
that's right. So I hope we answered that question.
You nailed it. For Teresa as well. Yeah, I think that was.
Teresa. Teresa was satisfied with that as well. Yes.
That was probably the best explanation I've ever heard to that question, actually. Thank you so much for being on tonight, Scott. We really appreciate you. Simon, what do you got? You see any in here that really...
Yes. No, I don't see any questions there. I actually have a couple of my own. And I'm always curious of this because every one of you IBC practitioners out there usually have a little bit of story, just a little bit different. And there's lots of different people here in the audience, and there'll be a great many more different people that watch this video. So one of my first questions is, what are some of the most common things that you have to re-educate people on to get them thinking correctly to do the IBC process?
Good question. So the thing that I have found that helps the most on keeping us from having to re-educate our clients is making this mandatory. Before someone becomes our client, if they're not willing to spend a few hours and read the 90 pages in this book, I won't work with them, because it's
92. It's 92.
Yeah. Well, some of it's glossary and that kind of stuff. Though, Simon, come on.
That counts in my world.
But those who read this book will read it more than one time over time, and it will serve to remind them why they're doing this and what they're doing. Now, there's still, though, we are in the education business, I call it. We're coaches and teachers and implementers of the infinite banking concept. And I have some clients that after about 3 years of having their policy or and building more policies over time, things like doing policy loans, they'll do their own policy loans. They'll call and initiate their own loans and set up their own amortization schedules and so forth. Then I have other clients that have been clients for 10 years, and they still, every time they want a policy loan and set up an amortization schedule, they call. I'm fine with whatever. I want to help, so we're fine with whichever, way to do that. But I would just say, reminding people that, as Nelson said, to be an honest banker and don't steal the peas. And many of our clients now have multiple policies, because this is not about just one and done. This is about creating a family and a system and a generational wealth transfer. I have my largest family of policies is 14, and that's on a mom, a dad, their brother, his brother and wife, and all the children and some of their employees. So I mean, and that took a number of years to accomplish, but reminding people, the importance of paying back policy loans, so the cash is there waiting for you again when you get ready for it. And sometimes simply reminding people that they have this in place. And I'll give you an example here recently. So, over the last year or two, I guess we've seen a huge jump in interest rates, right? Right. And truthfully, what we're seeing is where interest rates ought to be now. Interest rates should have never been 2%, 3%, whatever. Right. A house ought to be 6%, 7%. A car ought to be 8, 9, 10% interest rates. So as Nelson said, reality always sets in, and here it is. Well, the thing was, we got so soft and used to what it was for so long, artificially low interest rates, it slapped people between the eyes and caught them off guard. So, I've had a couple of people lately that talking to, calling them up, just checking in with them close to policy anniversary time, having a little review conversation with them, whatever. I say, so what have you got going on in your life that we can put, you've got $250,000 cash value sitting in your policy. What can we do with some of this money? Why, what do you need to do with it? And have you, you got any purchase in your life? I've had a couple of them tell me, no, but I just bought a vehicle. I just bought a $70,000 truck, 3 months ago. And I said, tell me that again.
What are you doing here?
I just bought, and then they stop and they'll say, oh, I should have done a policy loan.
I should have done that.
And I said, okay. And one guy, and I won't use his full name, but Tim, this was the most recent one. I said, Tim, tell me about your truck. Well, it was $70,000. I put $10,000 on it. I financed $60,000 at 8%. And I just sat there for a minute, and I said, you financed $60,000 at 8%. I said, Tim, who's making that 8% money? He said, I know. Get me a $60,000 policy loan. Let me pay this bank off and let me start using loans. And the crazy thing was this guy's done policy loans all along. He just kind of in the urgency of the moment, just kind of forgot about it. So,
shiny new truck got him.
Yeah. That's right. So now he's capturing some of those interest dollars that was flowing away from him. Now some of that money's flowing back to him. And I think another thing is just reminding people about this being a system of policies, that this is not a one and done. And people saying, I'm glad you called. I'm ready. I've been needing to call you for 3 or 4 or 5, 6 months. I'm ready to do another policy. I want to do another policy on myself, my wife, my children, whoever, and glad you called. So just being there for people and helping keep them headed in the right direction.
I love this question right here. I get this a lot. Maybe it's because I'm that age that I do a show. I get a lot of people that watch my show my age. What do you say to this one, Scott? This is a beautiful question. I'm 65, and I'm wondering if this could work for me. At my age, am I insurable? I know the insurable question really is a personal question.
Right.
That just depends on your personal health, and you need to get down there and figure out how insurable you are. But let's give her the scenario as to whether or not she probably is, I'm guessing, insurable, number one. But number two, if she's not, some of her options. What could she do?
So yeah, very, very possibly at age 65 could be insurable, could be not insurable. It's according to, like you said, health issues, health situation, going through an underwriting process and determining that. However, what I will say is that this is a life insurance policy. Life insurance has a cost. The older we get, the closer we are to death, the more it costs, right? So that's even though in a properly designed and structured whole life insurance policy for the infinite banking concept, on the front end, we minimize the death benefit as much as we can to maximize the cash value as much as we can. And what happens over time, the life expectancy or on life insurance contracts these days is age 121. And people laugh, say, well, who's going to live to be that? Oh, well, people are getting closer and closer all the time to living to be, 110, and so what they're saying is it changed to 121 in the last 10 years. So by the time people that were born then lived to be that long, people will be living to be 120.
Possibly, right? Yeah.
So as that cash value, we minimize that death benefit, maximize that cash value. Well, what has to happen over time as that policy reaches towards age 100, 121, that cash value has to grow as that death benefit grows. They have to eventually at 121 endow. So the later we wait in life, the older we are, obviously, the less time the insurance company has to make those numbers work out. So they have to charge more for the life insurance part of it. Yeah. So there's less going to the cash value side of it. You see what I'm saying?
Yeah, I certainly do. Yeah.
So the older we get, the harder it is to make the numbers work out for the infinite banking concept. Yes, Simon.
And the workaround for that would be, sorry, is that what you were going to ask? You're muted.
Simon, you're muted.
Go ahead. Ask your next question, Alan. Go ahead, Alan. Go ahead.
So let's say she's got a daughter. Is that a good way for her to go?
Mm-hmm. So in this book right here, Nelson Nash makes a comment that it doesn't matter who owns a policy. I mean, it doesn't matter whose life the policy is on. What matters is who owns it because they control it. So the answer to that question is yes. There's often other things that we can do to that the older person, the mom, the dad, the grandparent can own a policy, own a child, a grandchild, or whatever, and still get all the benefits from it as far as the growth, the utilization of the cash, the banking function. It's just that the generational wealth transfer perspective of it will start with if we're talking about the death benefit, the tax exempt death benefit will start when that insured person passes away rather than when the policy owner passes away.
Perfect.
Right.
Love that.
Yep.
So here's her lottery winnings right here.
Yeah. So she has a daughter who is 35. So yeah. So the interesting, and there again, it's an underwriting process. Daughter needs to be in good health and probably is, and those kind of things. And the interesting thing, and I don't know why this has happened, but in the insurance world in general, over the last 5 or so years, insurance companies will still allow us to write policies on adult children and so forth. They like for there to be some sort of tie other than blood. And what I mean by that is not just a child, not just the fact they're my blood, child, but is there a business tie? What is another factor that makes this work? And sometimes, we can work it. It's a case by case basis is honestly what it is, and so we can. I just always tell clients, tell me your story. Let's look at it and let's see what we can do for you.
So someone like Okay, so let's use this same scenario. We got Teresa, and then she's got the 35-year-old daughter. Hey, that's good, but we just need a little extra something there to show more of a, not more of, but some more importancy. Again, business, some type of business connection. So would a second executor of a trust be an important person to make that claim?
Could be. Yes,
Okay.
it could be.
Okay.
Yeah, and I'll tell you other ways to do this too. Is that, you know, with the gift limits on income taxes, a lot of times, you know, parents can gift money to children that can fund a policy, and there's kind of a workaround there on bringing the ownership back to the parent. So, you know, we just kind of have to, it's always a look at
creative thinking, imagination. It's all about imagination.
Yeah, that's right. I mean, you know, this is an exercise in philosophy and imagination. And
I love it.
Creativity,
I love it.
Yeah.
Man, I'm thinking all day.
I really think Teresa gets it, because she says, well, at this stage, I don't even care about the life insurance. Well, that tells you she's trying to use the money in another way, and she really likes it. Well, she said she likes the concept of the book, and she's looking to find somebody to help her with her policy. So,
and just remember, guys, like I said, reading this book is so fundamental. It really is. It is so key to understanding what you're doing and why you're doing it. And I just, you know, I tell people, please read it, and read it multiple times. You know,
I've been a student of economics since I was 25 years old, and when I first really started studying for my Series 7, and before that, I wanted to become a stockbroker, and it was really the number one thing in my life. I have heard concepts, ideas. I've dealt with trusts. I've played around with different things. I've been a student of economics. I picked the brains of billionaires my entire life. I've never seen anything like this. I've never seen anything so simple, and I've never seen anything so well thought out by a brilliant man who makes it black and white in 90 pages.
Right.
And like, for me, I got it instantly because I have that kind of mind. But most of the people in my group are really into economists because they follow my channel, and that's really what I talk about a lot. So I really think my listeners would really take to this. And they've asked some of the best questions over the last 4 or 5 shows just about this, that I know they're getting it. But I've never, to your point that you just made, I've never seen anything like it. I've never seen anything so logical, so simple, but yet it's the reverse of everything you've been taught your whole life.
Yep, that's right.
Because the man looked at it from a pioneer spirit of, well, I know what everybody else is doing, but how am I going to make this work for me? How am I going to make this work for the everyday guy? And everything in Wall Street is designed to treat you like a sheep, which is exactly what I think of. Everybody, when people tell me about IULs, that's the first thing I think of is you're an indexed individual from that point forward. You're part of just the herd.
Right.
There's no individualism in that at all. And that's what I really love about this whole thing.
You know, Nelson talks about in the book, he talks about how we have forgotten our role in the play. With the play of life, the stage of life, we've forgotten who the characters are and what role we should be. And we've surrendered control of everything financially in our life to a system, to Wall Street, to the government, to banks, where we ought to have control of that. And that's part of financial freedom, is when we are in control of it. And what Nelson taught us here is how to change the environment in which we operate financially, and to flow more of our money back to ourselves. And of course, Nelson was an airplane pilot, and he used a lot of aviation analogies, and he used one where talking about flying an airplane into a headwind versus a tailwind, and covering the same, footprint of mileage, but doing it doing it different ways, being patient and waiting till that tailwind comes along and then pushes you faster, and you don't have to worry about trying to fly that plane faster into a headwind, which is what most people do, because when they are trying to plan for their future, they've surrendered that future to a system. And so that system encourages them to take more risk, take more chance, and to have a greater rate of return, where what Nelson is telling us is take control, change the environment in which you live, in which you operate daily. Be great at what you already do, but let's make you more effective and more efficient at it by simply changing that environment. And here's what I mean by that. If I could show you a way to flow more of your money that already runs through your hand, if I could show you a way to simply flow more of that back to you rather than away from you, would you want to know about it? So I show people this. This is a $1 bill. And through our lifetime, many of these will run through our hands in the form of paychecks, playchecks, whatever, investment returns, whatever you want to call it. We're going to get a lot of these to run through our hands. Well, if you look and studies show that is about how much of that dollar we get to keep for ourselves. Now, my question is, where does the other 50%, what are the two things that the other 50% goes towards?
A couple of institutions that we just don't like.
Right.
Tax and interest.
Taxes and interest on debt.
Yeah,
right.
Property taxes, sales taxes, the biggest one being income taxes, and then interest on debt, mortgages, cars, student loans, or whatever. So
right.
50% of that dollar is flowing away from me. Now, I only have 50% of that dollar to do life with. I got to pay the principal on that debt. I got to educate the kids, buy the groceries, take care of the family, pay the insurances. And then I'm going to be down here trying to take a little bitty part of that and invest it for my future and hope that it all works out good and reality doesn't set in, and hope that my tax deferral doesn't get hammered with higher tax rates, and hope I don't retire in an 08-like environment and get hammered. So if I could just simply show you a way that without working any harder, without changing your cash flow, without taking any additional risk, and without creating any additional income tax, if I could simply show you a way to take those dollars that are already passing through your hand, and instead of only having that much left to do life on, what if I could show you a way that over time, maybe you'd have that much of it left, flowing back to you rather than away from you? And maybe over time, as the next generation comes along, what if we're flowing that much back to us rather than away from us with the same dollars you're already making that are already running through your hand? Now, if I go back to that 50% and I can show you a way to run 60% of that dollar back to you, did your wealth and net worth decrease without you having to do anything? I mean, increase without you having to do anything different?
Certainly
Absolutely.
did. Yeah,
Absolutely, it did.
100%,
So you didn't
no
have
question.
to take any additional risk. You didn't have to work any harder or anything. Now, down here where you were taking risk and trying to invest for retirement, if you want to take a little more risk with this because you got control of more of it up here, can't you do that now?
You
Yeah.
could.
yeah,
You could.
Good.
You could. And it's really that simple.
It is.
yeah.
It is. It's very
Yeah.
simple. It's cool.
And
It's
it's
really
just,
cool.
like you said earlier, it's tools. It's a process. It's not hard to understand once you wrap your head around it. You know,
That's
it's
right.
a process.
Yeah.
You've got
Look-
the contract, and now you just learn how to use the tools.
Right.
Yeah.
That's right. That's right. Yeah, but it's understanding the problem, realizing what the product is, and then utilizing the process the right way.
Yep.
Yeah.
Well said. The 3 Ps.
Yep, that's right. Exactly.
Yep.
Problem, product, process.
That's right. That's right. I like that. You know what really kind of did it for me was understanding that part that you explained. And Nelson, that's what I mean in the book. That was one of my first hot dang. And that was the flow of money that I keep sending across the street. It's like, wait a minute, I get to send this back to under my control that I can utilize later. right? That was my thought process on the first thing. Of course, the next one was, you can borrow against your, you can do a policy loan, which I like. I love that, especially in the crypto space, man. That's a no-brainer. That is a no brainer. But what that helped me to realize, and still that this continues, this thought process continues to grow and grow and grow, is I'm very aware right now of where the money's actually going, not for what, just to where. Is that going across the street, or is that going back to my banking system? And that's all. That's really it, because I'm still going to get what I need and what I want, throughout my life. So will everybody, right? But it's where that money finally ends up at. It's so cool. I get so happy about it. I feel like I should be in a car. Yeah, anyways,
fun stuff. Taking our personal wealth back under our own control. What a concept.
Yeah,
right.
There's no doubt. It's not, one thing I tell people all the time is infinite banking is nothing about get rich quick. There's not. If you come into this thinking it's get rich quick, you don't come into it because you're in the wrong place. But it is grow wealth slowly. It's grow generational wealth slowly. And what we have to understand, Nelson Nash was a forester, and he said many times, the best time, and down here in the South, we have lots of pine trees. And he said the best time to have planted a pine tree was 25 years ago, because that's about how long it takes a pine tree to grow to maturity to be harvested. He said the second best time to plant a pine tree is today, because if you didn't plant it 25 years ago, and if you don't plant it today, and the point he would make is the person who plants it may be dead in 25 years. But there again, if we're willing to think long range, think generations ahead, then it shouldn't matter to me if I'm going to be the one to harvest that pine tree or not, if I'm doing it for a reason bigger than I am, a picture bigger than I am. If I'm thinking about my family in the future and the good Lord leaves us here, then they're going to be here. What can I do today? Yeah, I want some benefit from it too, but ultimately the generation after me and the generation after them is going to benefit more and more. Nelson Nash owned 49 life insurance policies at his peak of life insurance policy ownership. And those policies, and y'all may have heard this before, they were on him, his wife, his children, his grandchildren, his great-grandchildren, his great-great-grandchildren. And as time went on and he grew older, he started giving those life insurance policies away. And when he died, of course, he had a lot of it, and multiple, I'm sure millions of dollars went into the family banking system, to the point that, from what I understand now, there's not a generation of his family that will ever have to set foot in a commercial bank to buy a house, to buy a business, to invest in real estate. The only reason they'll have to have a commercial bank is for a checking account. But if Nelson had not bought that first policy, if his brother had not sold him that first policy when he was in North Carolina in the timber business, none of this would have ever happened, today. So he planted that pine tree, and look at the harvest that's coming, from that.
Yep. That's right.
Absolutely.
Yeah.
Well said.
Yeah.
Well said.
XRP Slave, I just started a policy, and I'm 64 years old. So I think 50 is plenty young. I'd do it. That'd be my, not financial advice, but if you want to use the money that you currently spend and it just leaves your hands and it goes to your bank or Toyota or payments or whatever it might be, and if you'd like to get that money and keep that money within your loop, read this book and get a policy and understand what you're doing. It's very simple. You're a pretty sharp guy. You'll get this real quick. And the more you understand it, the more you'll want to do it, like Simon's talking about.
My gosh, I love doing this. I mean, we're all familiar with Mr. JV Jarrett, a man. Even today, we talk all the time, every day, and we're always creating. Thinking about what financial things are coming. Hey, how can we do this? Can we? We start thinking creative scenarios 5, 10, 15 years down the road. Now, I love doing that. That was a challenging task for me in my earlier years. Think 5 years ahead, think 10 years ahead. I can't think past lunch right now. Let's just be honest. But this has been just such an exciting and invigorating process that it has literally
addictive.
It very much. Well, when you have a solution that quite literally is the solution, it is your platform for whatever you want to do. And that's my opinion. But it is a platform. It is a keystone. It is the corners. It's the whole dang thing. You have this in play. You times get hard. You got somewhere to land. Times are good. You got nothing but up to go. I've been searching for anything like this to give an individual like myself through my trials and tribulations hope. Yeah. This is a guaranteed of hope and progress. Like it doesn't matter what I do with the rest of my life as far as a job, earning money. Like this is my legacy here. It's
a new career.
It really is. It really is. My business is banking.
Right.
That's right. And Nelson would say everybody ought to be in two businesses.
That's right.
They ought to be in what you do every day to make a living, and then you ought to be in the banking business, because banking truly is the most profitable business in the world.
It is. It is. Can't beat them, join them.
That's right. Yep.
You don't have to like them. Just have to join them.
Nelson called them snakes and dragons.
Right. Well,
Teresa's got this question, which is one we get a lot. Teresa, you can get in contact with Scott right here.
I work all over the country. Like I said, my furthest clients in Gold Beach, Oregon. So reach out to me. I'll be glad to help you and steer you in the right direction, and make sure I'm a Nelson Nash Pierce. I learned from the man himself, and be glad to help you out.
And we'll put your contacts in the show, and you can go ahead and give them to us at the end of the show. Okay. Speaking of, we've been on this a while.
You guys have to go there, Scott? I know I said about an hour, and I know we're running.
No, I'm good. You haven't seen me yawning yet. So.
Oh, good. Okay, but 3 hour show, Allan. Let's go. 3 hour show. 3 hour show.
I slept late this morning.
I've actually got stuff to do. I got a few things to get moving to, but no, I got a few minutes left. Please, Teresa, get a hold of this man. He seems to be a fine gentleman. I've known him a little bit. I'm about to go out there in a couple of weeks and meet them. And I'd like to go ahead and say this, Simon. We haven't finalized anything, but we're going to try and be in town that weekend prior. We're going to try. I'm still working on the dates, if I can be there that weekend. So maybe we could meet up some of the fine people of the lovely state of Georgia or Alabama, and maybe even northern Florida, that some people have reached out and said, man, it'd be great to see you if you're going to be in that part of the country. So we're going to be there at least 2 days, and we'll probably have our evenings open, but we're trying to be there Friday, Saturday, Sunday, Monday, Tuesday now, right, Simon?
Yeah, flying on a Friday night-ish afternoon, right? Then we'll have all the Saturday, all of Sunday. And then, of course, we'll be hitting it hard, getting all the content, good information, rubbing elbows with the Nelson Nash Elite Club. Not that there's a Nelson Nash Elite Club, but and we'll be doing that. And then we fly back home to our humble abodes Wednesday morning or evening or whatever that's going to be. So
I'm looking forward to that. That's going to be
it's just going to be another Vegas. It's going to be another Vegas trip, only on a whole nother awesome product, man. It's going to be great. I'm very much looking forward to it.
We're just all so lucky that we get to work with great people, and there's so many great people in my crypto community. But when I get to meet real people that really care about doing things for people, I need to say this because I'm not ever going to sell life insurance. That's really not what I'm going to do. But I have to say, anybody that's listening to this right now, their commissions are minuscule. I mean, it's absolutely, these people, when somebody says I'm a disciple or whatever, or a person of Nelson Nash and don't buy an IUL, when they're telling you not to buy an IUL and they're telling you not to buy term, they're cutting a lot of money right out of their pocket. I just need everybody to know that, because they're not able to say that. If they could go and just sell this other stuff all day long, their life would be financially a lot different place. So when you know that about many of these people, and they're teaching you how to use the tools to change your life, become your own bank, and get your own money back in your pocket, like Scott said earlier, Nelson didn't write the book about a product. You're the product. You become you become a banker, like Simon just said. You're now a banker. So that's what you call me. I'm a banker now. So you become responsible for your life and the money in it. And my hat's off to all of you who spend so much time. I was blown away by the gentleman that helped us out. Vance Lowe was the man. I don't know if you know him, Scott.
I think I've met him. Yeah.
Yeah. So Vance helped us out, Elizabeth and I, and his patience of Job. I couldn't believe it. He was giving up his time so much. And I thought, wow, that's just fantastic. And the process that, I don't know if you do this, Scott, but every episode or every hour that we spent with Vance, he recorded. And he sent it to us so that we could hear it again and again and again and again. He's like, hey, we talked about that. You just go back and listen to that video one more time, because you know, that to me was priceless.
Great for any YouTube content creator, man. Go watch the video again. No, go back and watch the video again.
That's right.
Becoming your own banker right here, ladies and gentlemen. I'm doing it old school. I know you can't see the writing on these, but these are 2 envelopes. One is the pay myself first protocol. Man, don't be afraid to capitalize. This envelope right here is interest that I've made on loans. Now I'm doing this. Why? So one, it's my accountability. I work better if I just make little piles, because I want to be able to do this 10 years down the road and have it all locked in my mind or on a spreadsheet. But before I get to the spreadsheet, I like to just a couple of piles, and it's really, really helped me out. I love this, man. I love my loans. I love creating debt for myself. It's great. It's an awesome hobby.
Simon,
but it's fun.
Go ahead.
That's one of my favorite. It's one of my favorite things is that when you see people and the light bulb goes off, it's like, oh, debt is good. Like when you understand that, if you're using debt correctly and it's your debt and you're paying it back to yourself, debt is a good thing. So it's like, I've always known that because I've always used capital in different ways in my whole life. But like now, it's a whole different ball of wax. It's a whole different way of using debt for personal gain.
I think going back to one of the questions that Simon asked me earlier about what's one of the things we have to keep reminding people about too, and is that what we have to remember is that when we take a policy loan, our death benefit is much higher as we go forward in the policy than it was when we started, and our cash value will be much higher. So let's say my death benefit started off at $300,000. Now it's up to $500,000, and my cash value is up to $100,000. I'm just using numbers here. Sure. So when I take that policy loan, the insurance company is going to send me money from their general fund. They're basically their checking account. And they're going to send me, they're not going to send me more than my cash value is, and they're not going to send me 100% of my cash value because some of it has to remain for it to be a life insurance policy. Right. But let's say I took a $50,000 policy loan. So when I call them for that policy loan and I say, send me a check for $50,000, what they don't do is ask me any questions about what am I going to do with the money? What's my monthly payment going to be, and when am I going to pay it back, and how long am I going to take? It is a completely 100% unstructured loan that I am fully in control of. And not only that, I get to dictate the terms on how and if and when I pay that policy loan back. But also that $50,000 is simply the life insurance company sees it as an advance of that $500,000 death benefit. That $500,000 death benefit is what is securing that policy loan, because that $500,000 death benefit now becomes $450,000 because the life insurance company sees it as having already sent me $50,000 of that $500,000, and I'm still alive. I'm getting a living benefit.
Right.
So because my money didn't leave that contract, now I take that $50,000 and maybe I went and bought a rental house with it, or a flip house or something like that. And XRP, whatever my asset is that or I could buy a car. Let's say this. Let's do this.
Car.
Let's buy a car with it.
Sure.
Let's buy a $50,000 car. All right. So now by 50,000, because it truly did not leave my contract, it is still earning interest and dividends in my contract, and I have the new car. So now, how many assets are better than the others? One asset better than two, or is two better than one?
Yeah.
Two assets are better than one. So
Always.
Now I've still got my 50,000 earning money, here, and I've got my car that's going to get me back and forth to where I need to go in life. And so what Nelson would teach us, going back to the honest banking conversation, being the honest banker, he would say, all right, Scott, before you knew about infinite banking, how would you have bought that car? And I might say, well, Nelson, I would have saved up money and gone and paid cash for it. He would say, well, that's doing a lot better than most people would do. But let's say you had that cash. Where were you saving that cash? And I would say, well, I had it in a savings account, and maybe at that time it was earning 2% interest. And he would say, okay, when you take that $50,000 out of that savings account, how much interest can that ever earn you again?
Zero.
It earned me nothing ever again. So my opportunity cost was 100%. I gave up all the opportunity for that money to ever work for me again. Or I would have said, well, Nelson, I would have gone to the bank if I didn't have the cash. Maybe I've got $5,000 down payment and I go borrow the other $45,000. He would say, okay, when Mr. Banker tells you that they're going to give you 60 months to pay it back, it's going to be 9% interest, and here's how much your payment's going to be. How much are you going to be able to play in that equation and say, no, I don't want it to be 60 months. I want 84 months, and I want my interest rate to be 5%. What's Mr. Banker going to say to you? He's going to say, goodbye, see you, get out of my office, right?
That's right.
And he would also say, what's going to happen a year down the road when you lose your job? If life throws you a curveball, the company you were working for moves out of town, closes up shop, and you're without a job. And, 60 days later, you haven't found a comparable job, and you need to make a car payment, and you can't make that car payment, and the bank comes knocking on the door. Who's in control of whether or not they're going to repo your car? They're in control of it, right?
That's right.
So he would simply say, remember the control factor and the honest banker, that this is an unstructured loan. If I lose my job, life throws me a curveball, I need to stop making those payments back to the insurance company. All I got to do is pick up the phone and say, hey, Scott Chapman, policy number so-and-so, do not draft any more payments on my car on my policy loan until I call you back and tell you, thank you, have a good day. And that's as simple as it is. I'm in control.
I love that.
The other thing he would say is, if you were to go to the bank and gladly smiled and signed that dotted line and paid them 8-9% interest, by gosh, you better be willing to pay the Chapman family bank back at that same interest rate, or you don't understand the value of money. If you value a bank's money more than yours, no wonder you're headed in the direction you're headed in your financial life. So what he would say would be, pay that policy loan. Maybe I'm getting a loan from my policy at 4 or 5%. Pay it back at 9%. And to your point about the envelopes you had there, what I have my clients do is create a separate checking account. This is your infinite banking concept checking account. The only money that's going in here, all the money's coming in, and whatever you're going to do with that money going out, and then you're going to redirect your payments back in here to the insurance company. And as that money accumulates, if I'm paying back at 9%, I'm sending 4 or 5% to the insurance company. It's a mutual company. That's profit to them. Some of that's coming back to me in my dividends. I'm not worried about that. That money that's accumulating in here, maybe at the end of the year, I've got $800 accumulated with excess interest. It's been, that's really just extra savings is what it is. That's now, I pick up the phone, and Simon or Allan, let's say this was one of y'all, you pick up the phone, call me, say, Scott, hey, I've got $800 accumulated in my checking account. I want to see if I can work it into my policy or system of policy or policies. Okay. And we call the insurance company, say, Allan's got an extra $800. Can we put it in this policy without that policy ever becoming a modified endowment contract? This is critical right here.
Yeah.
And so the life insurance company is going to run what's called an in-force illustration. And my question to them is, I don't want this policy to ever become a modified endowment contract. Not this year, not next year, not 50 years down the road. And they come back and say, you can put that $800 in here and the policy will never become a MEC. Or they might come back and say, hey, you can put it in here, but in policy year 55, the contract's going to MEC. Well, at that time, I might be 100 years old, and it might not matter if it becomes a MEC. You know what I'm saying?
Sure. Right.
But we want to work that money back in and get it earning tax-free interest and dividends.
Yeah.
So that it provides us, it grows that death benefit, which causes that cash value to grow. And I got tax-exempt money coming back to me in cash flow.
And let me backtrack just a little bit for people. Now, the disadvantage of MEC, or MECing out, as the term goes, is you're going to be taxed on that additional money, correct?
Correct.
Yeah. And we don't want that.
That's right. That's right.
Yeah.
That's sort of an advanced level of what we're doing.
Yeah, that's
here.
like a tier 3 rule on deep standing of that. Is it like a tier 2?
Right here.
Yeah.
It's right
What
here.
page is that?
You see that point right there on that line? That's page 38.
Okay.
And what Nelson would talk about is it's kind of like this. In 1984, 5, 6, somewhere along in there, one thing that the IRS, the government, did step in and say was too many people were sheltering. Basically, what they were doing was taking gobs of money, dropping them in single premium life insurance policies, getting very little death benefit, and they did it for a tax shelter. And at that time, the IRS came back and said, hey, that's an investment, not life insurance. We're going to start taxing that like an investment.
Right.
So as long as we structure now, rather than taking, if somebody had $500,000 and they would have dropped it in one policy at that time, now we just take that 500,000 or 50,000 or 5,000, whatever the numbers are, take zeros off, add zeros on, and we divide it up over a certain number of years, usually between 4 and 7 years, that we're going to work that money into that policy in even increments, so that it stays tax exempt in the future and never becomes a modified endowment contract. If we cross that line of modified endowment contract, the growth in the policy will become taxable. However, if we design it, structure, and fund it the right way from the beginning, that will not happen down the road as long as we do our part the way we said we were going to do it. Okay.
And you can just open another policy if you get to a financial place in your life. Yeah,
exactly right. Yep.
You know, folks, I want to touch on something right here. I want to highlight something. Folks, I know you're listening to us right now, but what Scott just ran through is why you want to use someone that is an authorized IBC practitioner like Scott right here. This is why. Yes. Because he's talking about a specific design contract. Like, this is paramount. You know, the identifying the modified endowment contract is paramount. You want someone like Scott. You want someone like JV. You want these people to have your back. And that's literally the difference, in my opinion, here is the people that care. Sorry, I was going to say something else. The people that care, that really care. Yeah. Sorry, I'm on the West Coast. We slightly talk different after sundown. Somebody like Kelly over that at Emeritus that I got the privilege to watch and listen to him. You could just you could see it in his eyes. You could hear it in his voice. He actually cares about the people that he's trying to do all this good work for. So I just wanted to highlight that.
Simon, to to that point, if I might, back probably 10 years ago, I was at one of our think tanks, and this was when they were all being done in Birmingham, and think tank was Thursday and Friday, and then on Saturday morning, Nelson would do an open to the public half-day seminar, kind of a mini version of his seminar. And so a guy traveled over from Atlanta, Georgia. I did not know him, and he was in that seminar, and I was there. And at a break, he went up and introduced himself to Nelson, and Nelson said, "So you're from Georgia?" And he said, "Yeah." And he said, and he hollers across the room literally, and he calls me, gets my attention. He comes over and he introduces us, and he says, "This is the guy that you need to work with." And Brent was telling him, the client was telling him his story, and the client had a friend that was a life insurance agent, and he had gone to him with Nelson's book. Brent had gone to this friend of his with Nelson's book, and Brent said, "Hey, I want to do this. Can you help me?" And the friend said, "Yeah, I can. I know what to do. I'll help you out." Well, Brent didn't know, and the guy set him up with an IUL policy. Damn. And about 2 years into it, it just broke loose. It was not working, and they got to looking, and Brent realized that it was not what he needed it to be. So that's what led him to Birmingham to hear Nelson and to learn what really needed to be done. And so I'm not saying that friend of his had no ill intent in doing. He just did not know. He didn't know the right thing to do. He didn't know what to do, how to do it. He was a traditional life insurance agent, and that's one thing I didn't have the background in. I was in the construction business. I was a contractor until 2008. So, I didn't have to overcome all of that and thought I had the arrival syndrome and thought I already knew everything. I was very unassumptive. And so, learning that from day one and learning the right way to do it, the right product, the right design, and how to help that client was very important.
It's so important because all of us have not been taught in school. In fact, we've been told the exact opposite of what you should do with all of your money. That's I don't believe. I'm not going to throw the man under the bus, but there's a guy with millions of followers who tell everybody to save their money and then buy the car cash. It's
empty the bucket.
Yeah, that's it. And it just he has millions of followers, and the man. Okay, that worked maybe in the 30s and the 40s. That was 100 years ago, folks. That doesn't work in today's world. When you're dealing with that, inflation is running you down, and you can't even keep up with inflation, let alone make a buck. Anyway, I don't want to get too deep into that because then I get all worked up about it. This is what I call financial education. This is how to use money. But the beautiful part is you get to have this coach. This fine gentleman right here, Scott, or many people like him, who all of a sudden you got a coach on your side going, well, let's just look at your finance. Okay, well, you got a car payment, you got a school payment, you got this over here, and you got a doctor bill or whatever it might be, and you got a mortgage. Well, let's figure this thing out. Let's get to the bottom of those to where we can get you whole and even again. This isn't about how much money you're going to make, your kids are going to make when you die. This is the total opposite of that. This is how do we use each buck you make to its fullest extent of making you more bucks, and how do we keep them? It's that simple. And nobody's taught you how to do that your whole life. And there's fine folks like Scott and JV and many other people that we're going to meet through this whole process. That are going to help everybody understand what a dollar is in your pocket, the power it has. We've forgotten or never been taught.
Well, it's whose pocket that dollar is in.
That's right.
Whose pocket the dollar is in. That's where it's at, man.
Yeah. There is a system out there that thinks your dollars feel better in their pocket than they do in your own pocket.
Oh no, my dollars like Carhartt pants and jeans.
Right.
Right. Occasional Adidas sweatpants when it's nighttime. Scott, I got your full name here and your phone number ready to go in the chat. Is that all right if I post that there? You good with that?
Sure, absolutely. And people are
willing,
feel free to text, call, whatever. That's my cell phone.
You heard him, ladies and gentlemen. Give him all the text you want.
Blow him up.
Right. That's right.
That's good.
Hey, I want to show you something. You guys ever read this book?
I have not, but I've heard lots about it. I've talked to a great many other people that have read that book.
By the way, I've actually been there.
Yeah, I've been there several times. I live. Yeah. It's 3 hours from my house to right there where that.
I figured. Well, I knew you were
really.
Yeah.
Like
here's this.
I've been up the New River.
Yeah.
But like 3-4 times up the East Coast, and it's right on your way up the New River.
So here's a sad thing. I live and grew up 3 hours from where this happened, and never knew a thing about it until I turned 40 years old.
And you read the book.
And I read the book, and here's the story. Yeah. So when I was in the contracting business, I talked about reality setting in, and boy, we thought things were great and good, and we were building and we were going and flowing, and nothing could stop us now. And I think there's a song about that. But anyway, nothing could stop us, and then boom, bang, bust! It all fell apart, broke loose, and came untied. And I was like, what just happened? The housing bubble, September, October 2008, everything just falls apart. And literally at church one Sunday, a friend of mine who's 25 years older than I am, he came up to me, and I was 40 years old. He said, I'm coming to see you tomorrow. I got a book I'm going to bring to you. And this is the book that he walks in my office the next day. This is not the copy of it. The other copy's at my office. But he hands me this. And I look at him, and I open this book up, and I said, Bill, this book is almost 600 pages long. I haven't read 600 pages since college. Now, I was being braggadocious. I thought I'd say that, not realizing how stupid that was. He said, read that book. So I did. I sat down and I started reading this book and the story and the documented history behind it. And I took off to Jekyll Island, Georgia, and went to the Jekyll Island Club Hotel and went to the History Museum and verified that what's written in this book is true and accurate. And I was like, oh my gosh, this is unreal, because the plan they put in place at Jekyll Island in 1910 and became the Federal Reserve in 1913, 2008 was a perfect play out of that. Too big to fail. The Rockefellers, the Morgans, the Rothschilds, the Vanderbilts, all these people, too big to fail. And here it was right here in black and white, but nobody knew anything about it. And so I said, okay, now I know of the problem, but what do I do? How do I solve this problem?
Right. Yeah.
It's great, but how do I know the problem?
Other than stand around and complain all day. Yeah.
Yep. Well, then a guy completely unrelated, nothing to do with this guy in this book, hands me this book a few months later. And I'm sitting in my recliner upstairs right above where I'm sitting in the basement here right now, directly above. And I read this book on a Sunday afternoon, and I flipped to the back, and he's got some suggested readings back here. And one of them, I'm sitting there and I'm reading, and right here, guess what that book is? The Creature from Jekyll Island. And I'm like, all right, Lord, what are you telling me now? Because this is not just coincidence. I got a job to do, and that's what set me on this mission that I've been on since then.
I see. That's what I love. I love hearing that story. That how you got there. What was the not just, hey, I was reading this book and then this book came into my life. It's in that, what was your aha moment, in there? You just shared kind of one of your ahas, like, nope, I'm gonna give this a look, because there's my book in there that I just read that talked about the problem. And it's actually I'm laughing here. You're holding up the 600 page book, and then you're holding up Nelson Nash's Become Your Own Banker book. What's humorous to me in this moment is you have the book that talks about the problem. 600 pages.
That's exactly right.
Big problem, right? And then you hold up the other book, 92 pages. That's a solution, and it's small. Exactly. It's like it's humorous to me.
So get this. So to your point, every time we do a seminar, I do exactly what you just said. I'll hold this book up and I'll say, you see how thick this book, this tells us about the banking and the money flow problem. Remember when I did the dollar bill analogy a while ago, the money flowing away from us, this tells us about that. Look how thick, 600 pages.
That's a big
92 pages. But there's another book I have that's called the United States Tax Code. All right. And I bought that book in 2022 just to have, because that book is about this thick. And so it is the other part of the problem. There's two problems Nelson talks about in here, the banking and the taxation. Here's the banking problem. The tax code book weighs 4.9 pounds. We literally weighed it on a scale. It's 4.9 pounds of paper. So if you take that book and set it on top of this one, you've got that much paper talking about the problem. And here's your solution right here.
There's the answer.
So much simpler. So much simpler.
In the tax code book, remember this, guys. In the tax code book, the most valuable page in the entire book is page 31. And you will read in there some fine print. And I urge anyone to read, because there's numerous places.
Man, I thought I was going to bed on time tonight, dude. Allan, you do this to me every show. Every show. I'm like, no, gotta go look at something else again.
Yeah, there's numerous places in that page, but there is one paragraph or two sentences in there that essentially says that if you don't have a trust, you're an idiot. And that's the tax code telling you that.
Yeah.
Anyway, that's a whole nother stuff. That's a whole different.
That's right.
But I got to tell you my story about Jekyll Island. I met the man who wrote the book.
Yeah, you did.
And he, oh my God, he's as sharp today as the day he wrote that book, maybe sharper. And I thought to myself, okay, all right, I'm gonna hit this guy with a bunch of questions, because I read the book when he first wrote it, because that was who I was at that moment in time. I had a Swiss banker who actually begged me to read the book, and there's another one too called they're very similar. Economic Hitman. I forgot the exact. Yeah, that one's similar. Yep. But so anyway, where was it going? When I met the man in Vegas, I was at the Silver Symposium when I met him, and I said, "Oh, would you like to have lunch with him? Sit down." I said, "Well, yeah, but I mean, everybody at this room probably wants to sit down and have lunch with him. I just want to ask him a couple of questions." And then, so one of the questions is so great; it's perfect for this channel. I wanted to know where the follow-up answer book is. That was that was a question I asked that man before I knew about Nelson Nash's book. Think about that. I was like, well, okay, you've painted the problem really well.
Right.
What's the solution? Is it buy gold? Is it dig a bunker? Bury all your kinfolk in a hole?
Dig a bunker.
Where's your answer?
Let's take a policy loan, dig a bunker.
And he goes, nobody ever asked me that question.
Right.
But I'm glad you did. But a few people have asked him, obviously. I wasn't the only person on the planet. But he was such a great, oh my God. He got up there and he didn't need a screen, he didn't need anything. That guy painted a picture of the economics world in which we live in right off the top of his head that was so perfectly lined up. And he made it as simple as just talking about cheeseburgers. And I was like, wow, that's talent. That guy's brilliant, by the way. The best compliment you can give a man is when he can talk about something really complicated and make it real simple.
Right. Yep. I used to do a radio show called Money, Taxes, and Freedom. And I interviewed G. Edward Griffith a couple of times on my radio show. And I enjoyed the conversation. Talked to him too, what's the solution to the problem? I found it, I went looking, you set me on a journey and I wanted the solution, and I found it. And a funny story about this book. So back in May, like I said, Jekyll Island, Georgia is 3 hours down the road for us. So back in May, my wife and family, and we were down there, and you could buy this book on the property at the Jekyll Island Club Hotel.
Oh, cool.
You could buy it. So we went in the hotel and I was showing my youngest son, I was walking him through it. There's literally a room in there called the Federal Reserve Room, which is said to be the room that the 7 men met in when they put the plan together. Their pictures are on the wall in there and everything. And we were walking around the property and looking at all the quaint cottages that they had for 4 months out of the year. These are immaculate 3,000 square foot, 2-story the finest of architecture
Beautiful.
and ornamental, beautiful homes. And that was their wintertime playground. But anyway, I noticed in the gift shop that they didn't have copies of this book on the shelf anymore. And so I walked over to the counter, and there was this young lady there, and I'm going to say she was probably 25 years old. That was the clerk there behind the counter. And I'm like, you never know what you're going to get these days. So I asked her the question. I said, I don't see any copies on the shelf of The Creature from Jekyll Island. Right. And she looked at me and she said, no, they won't let us sell it anymore. And I said, really? She said, yeah. I said, why not? She said, they tell us it's too controversial. And I'm like, you got to be kidding me. It ought to be required reading for every red-blooded American by the time they hit high school that they have read this book. I wish I had have. And I said, you mean the truth is controversial? And she said, exactly.
It's always.
And exactly.
Always.
It is. They crucified it 2,000 years ago. So she and I engaged in a conversation, and much to my surprise, here's a 25-year-old young lady that was actually thinking the same way I was about it. She knew about it, but said it was too controversial for them to have this in there. And this did as much to destroy this country as anything that's ever been done.
Oh, yeah. Yeah. In the logic in it. Maybe I'm just guessing. I'm just throwing it out there. Maybe that's right about the time they took down the Georgia Guidestones. I don't know. I'm just saying.
Yeah.
It might be related. Who knows?
It could be.
Yeah.
Oh, hey, wait a minute. I forgot to bring my tinfoil hat, guys. I'm sorry. I know at these meetings we gotta follow protocol. Dang it, man.
Yeah. I don't know if you guys saw this today, but a gentleman that, oh gosh, I was about to say something crypto. I guess I can. My show. Say whatever I want to say. Our buddy, I don't know him, but I know somebody that works for him pretty well, has been telling me this for a very long time. He came out today, CEO of Goldman Sachs, came out today and said, yeah, we think Bitcoin's actually a very sound investment.
Whoa!
Wow! Today on CNBC. So I was like, well, they're falling like dominoes. But the crazy thing is I've known that guy's been in for a couple of years. So like my phone blew up with a bunch of texts, right? And they're like, hey, did you hear this? Have you seen this? Oh, I can send the video to you. And I was like, yeah, I'd heard that before. But remember, when they say it on TV, that means they're already in.
Yeah.
He didn't just wake up out of bed this morning and decide he was going to buy him some Bitcoin.
That's called the rule of three, Allan.
Oh, yeah, exactly.
Anything that's said on TV in that type of fashion context happened 3 years ago.
That's right. That's it. Minimum.
Rule of three. Even if they say, well, we've been in it for a couple of months. So that's 3 times 2 plus 3 years.
So let's see. Let's just go back. The last 12 months, it's been, let's see, Goldman Sachs, JP Morgan now, and what? A little company called BlackRock. Huh. Oh, and Fidelity. They're just falling like dominoes. It's crazy, man. I never thought 6-8 years ago when I got into this whole thing that they would actually be on TV talking about it, let alone president.
All the talking heads, all the heads of institutions like there is right now. Politicians going to events and very televised. I really didn't think that. So here's what I want.
I really got to close this.
Are we going to ever experience the same thing only with the infinite banking concept? Do you think we'll ever experience that?
Go ahead.
Maybe. I don't know.
You guys don't want to touch the question? Wow, man, it must be a good one.
Well, here's what Carlos Lara, who's one of the
Oh,
Yeah.
dude,
Great
I'm
video.
sorry. Side note, I watched one of the videos on Nelson Nash Institute. He did his presentation, man. It was the best presentation I've seen.
So good.
For the explanation for a business. It was
For
really
business.
awesome. But go ahead.
Yeah.
Go ahead. Sorry.
But he calls it building the 10%. And the whole idea there is that if we could get to a point where 10% of the people in this country were doing the infinite banking concept, then the other 90% will quickly that 90%, the early adopters drive the later adopters. In other words, that you get a 10%, you hit a tipping point that those who want it out of the other 90% will move to it faster than it took you to get to that 10%. So, right. We'll see. Hey, but here's the answer to your question. It won't be because I didn't try to make it happen. I promise you that I'm doing all I can to make it happen.
Well, there's 3 of us trying now.
Yeah, that's right. That's right.
Yeah, that's good,
that's
man.
Right.
Wow, Alabama's going to be real fun. I already know it's going to be a good time, man.
Can't wait.
Be very good time. Can't wait.
And I'll tell you what, there's some people in here. If you're anywhere even near Alabama, we're going to try and get confirmation on when we're going to be there. I know that Sammy was like, I live in Northern Florida. I'll be there if you guys are going to be there. So we'll do a meetup of some kind. Gentlemen,
we might be by Sugar White Chin, but you got to go.
I've got to run.
Sorry.
20 minutes ago, I got to run. Such a great show. Scott, we are definitely going to have you back on here, sir.
You've been thank you.
A blessing to us all tonight. The way you put your answers, you've done this before, clearly.
Well, I've been blessed.
Yeah,
14 years in the game, man. 14 years in the game.
I've been blessed to be surrounded by people like Justin Kraft and other people, and Nelson himself that know far more about it. And I never want to be the smartest person in the room, because if I find myself being that, I'm in the wrong room. And so I'm always constantly learning, wanting to learn like a sponge. And so, I just I try to hear from credible sources and relay that on to people who want to know it. So thank you guys for having me on tonight.
We really appreciate your wisdom and your knowledge, and we definitely will have you back on. Tonight went way too fast. It
is hard to believe, man. It's past my bedtime.
We're almost coming up in 2 hours.
It's kind of a standard on this show. We tend to keep people up, but we just do. We're good at it.
And guess what? I haven't yawned. You guys have not seen me yawn one time.
No,
you haven't. No. I know when you're yawning. I know when you're yawning. It's right here. You get a beverage. I do it all the time. Take a sip of beverage. Yawn,
I haven't done that.
And then take a drink. Hey Scott, real quick, where can the folks find you? I want you to put out your site there. Where can they find you?
Yeah, so you put my phone number out there. I think you said it's in the comments. Feel free to reach out, text message, 478-521-0856. You can email me at Scott, SCOTT at Nowlin, NOWLINWM.com. So Scott at NOWLINWM.com. That's the address, the email address that I use. I have another one that you guys use, but also use that one. But yeah, give me a shout. I'd be glad to help you. Like I said, we work with people all over the country. Having learned from the man himself, I'm a Nelson Nash purist, and I'll lead you in the right direction and help you get set up if you want to do so. So just appreciate the opportunity.
Yeah.
Thank you, Scott. I really appreciate your time today, man.
Yeah. The pleasure was all ours, sir. Thank you, everybody who's in here and commented in the chats. Thanks, guys. And Simon, do you have any closing words, or should we get out of here?
Simon says, go get the book and read it twice.
That's at least twice.
Good advice. Good advice.
It's fantastic advice.
Right.
Good night, everybody.
Good night, everybody.
Good night, everybody.
Thanks.
I'm going to hang back for a minute.